HP looking very un-PC, and it's a good day for spam fans. Eey. Okay, here he is, Jonathan Marino, editor of Reuters PE Hub. Let's talk about HP, bleak news, as well as Dell. What's a company like that to do in an age of tablets and smartphones and going paperless when they've got PCs and printers?
Right, their verticals really aren't matching up right now. On their quarterly conference call, CEO Meg Whitman said personal computing is not dead. What she didn't mention is that personal computing is going further and further away from the PC. That's bad news for HP. Their Palm acquisition didn't pan out the way they wanted to. They're not going to be successful in the tablet market. At this point, they might be kind of better off making a move like what AOL did, which has seen their stock rise more than 100% this year, and that starts selling off some of their IP, starts selling off some of their patents, starts selling off some of the things that they don't really need, maybe like the PC unit. When he was CEO, Leo Apotheker suggested that they could deal it, and Meg Whitman has backtracked.
Interesting, so we'll have to keep an eye on that. All right, let's move over to the hot spot, and as we do, remember to check out the headlines below me for more news of the day. Jonathan, Big Lots, they are the biggest loser on the New York Stock Exchange today, down about 22%. This is a company that kind of takes stuff from other retailers, overstocked or rejected items, and sells them. Not doing well.
Right. Maybe we should start calling them small lots. Their two biggest competitors, and also companies that have been much more successful than them, is Family Dollar and Dollar General. They respectively have 7,000 and 9,000 stores. Big Lots only has 1,400, and that small footprint might be what's hurting them.
Okay, interesting. Kayak, we've talked about them. They're down 3%, which is actually just a dip. They did well. This is their first earnings report since the IPO in January, which we've discussed. They're doing well on mobile, and they beat estimates, but I guess investors thought that they'd do even better because the stock rose and then took a bit of a dip.
That's true. They haven't really outperformed since their IPO. They're just kind of trading in a little range. It seems like at this point, at least they're optimistic. They're saying that they're going to increase their estimates for the third quarter. As long as they manage to match or beat them, investors will be satisfied. They're obviously in a really crowded space.
Sure, yeah, with Orbitz and Priceline and others, and some of whom have not done so well recently.
Right.
Ancestry.com, this is interesting. Now, this is a site where you can obviously trace your lineage, and they have a lot of other .com sites that they're an umbrella title over. Bids from PE firms, they feel, have come up short to buy this company, and they're down about 2.5% today.
It sounds like maybe the biggest shareholders feel like the PE firms are coming up short. This kind of reminds me of the New York Post story on Entertainment Arts. They wanted to take about 40% premium to go private. There's probably too much of a premium on premiums for listed companies for where we're at in the market. Their shares had traded at a $40 per share high. They actually were above the $40 per share mark in mid-2011. They're at about $30 per share now. A premium probably wouldn't put them up past that all-time high, so maybe they should expect PE to hold off. Investors seem pretty satisfied, though. I think their stock is still trading up today.
Now, they have a television show, or they did, called Who Do You Think You Are, which aired on NBC. I actually was one of the handful that watched it.
You weren't on it.
No, I wasn't on it. But I know Martin Sheen's lineage, it traces people's lineage, and
he's embarrassed
Helen
about
Hunt. He's embarrassed about it. It was on NBC, they canceled it. Yeah, I know their lineage, and fat lot of good it does me. But it was a decent show. All right, let's head back then and talk about why I've been carrying this around all day with cheese, the spam.
Because lunch?
Because it's time for lunch. This is all you, by the way. Spam, 75th anniversary, but Hormel up about 1.5% today, had higher results than expected, and their grocery products are going strong.
Right. A little bit of bad news for them. I guess they're not trading beyond, say, the pace of the Dow. They are, however, trading at a better pace than competitors Smithfield and Tyson Foods. It is kind of an outperform for them. It's good news for now, but they're going to be seeing, I guess, some headwinds coming up. There's obviously the corn crisis, so-called, impacting their feed, but also they run a tortilla business.
I did not know that.
It's a place to put your spam.
Spam on the tortillas. All right, let's quickly take it, and spam's big in Hawaii. And that's what we'll say about spam. Let's take a look at some of the broader markets here. Everybody's down today, a bit there, and as we see some red arrows. Weighing on the markets today, mixed housing news. We had new home sales up about 3.6%. That was much better than expected, but prices fell on houses, so that's kind of mixed our housing news up here. U.S. steelmakers down 5% today on a whole, and you can see some of the steelmakers there. This is at Wall Street Analyst, downgrading the sector, anticipating a price drop here due to weak demand, among other things. So that's it for today. Jonathan Marino, thanks so much, editor of Reuters PE Hub, and Cheesy does it. Anyway, we are at Reuters Insider on Twitter, so follow us there and check out our Reuters YouTube channel. That is Reuters.com/Reuters TV. I'm Lisa Bernhard, and this is Reuters.